Warren Buffett got out his elephant gun, and now he's gone after Heinz, big food maker. I am here with Keith Bliss from Cuttone. So I guess we're not totally surprised, but that because he did want to go after a big company. He said he had his elephant gun out. This is a big company.
Largest food deal, largest food company deal in history. $28 billion for Heinz. I mean, it's an iconic global brand, and that's clearly what Mr. Buffett goes after, and he likes those. I mean, he's invested in Coca-Cola. He's invested in Mars and helped Mars with their Wrigley acquisition, and his partner in this is very interesting, which is Mr. Lehman, himself his own billionaire, which is also invested in food companies. So this is a match made in ketchup heaven, I guess you could say. It's really a good deal. And again, it's kind of outside of the typical purview of Berkshire Hathaway, where they're known as more of a financial company conglomerate, but he's not afraid to go after food companies. And again, it's about global brands, unlocking value, and companies that will compete on the global stage, and clearly Heinz is positioned to do that.
What is this going to mean for other food companies? Is this going to bring their value up? Is this going to bring more attention to them? Does it make them more valuable to investors now?
Well, perhaps it does, but it's clear that the companies that are going to be in Warren's firing line, in Mr. Buffett's firing line, are people that have a global footprint and are at a price point where the acquisition can be made. Don't forget that Nelson Peltz has been inside of Heinz since 2006, and he's been urging them to do something with that company to unlock the value. This is a good place to do it. The other companies with global footprints like that are the really humongous mega cap companies, PepsiCo, Coca-Cola. I'm not sure.
Unilever.
Yeah, all those. I'm not sure Mr. Buffett's elephant gun has a round big enough to take those down, but certainly that's the type of company he would be looking at. Some of the smaller food companies, maybe if we see a merger and acquisition deal flow take shape in 2013, which we're starting to see pretty curiously in the first 2 months, then they might be able to get to some sort of size that would get his attention. But short of that, right now, he'll probably take a breather, let this come into the market a little bit, make some money off of it, which Heinz clearly will do going forward.
Yeah, I think, like you said, I think just whenever he does something like this, it brings attention to a group that maybe people had not paid as much attention to. I think we're going to, like you said, start to see a little bit more activity in this area, right?
Yeah, I would agree with that. I think what it's primarily going to do is not so much people raising their hand and saying, here I am, Mr. Buffett, come and get me, but I think you'll start to see a lot more consolidation in some of the second tier and third tier food companies. They're going to know they need size and scale and a bigger footprint across the global stage to really start competing with these, and perhaps become attractive to a good value investor like Mr. Buffett or Mr. Lehman.
All right, well, it sounds like now we got food stocks on investors' menus. That is Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.